Hi, everyone, and welcome to Bitcoin Analysis Beyond the Block for October 2024, brought to you by Ainslie Crypto. We're back again this month with our panel. We've got Joe and Isaac. How are you going today, gentlemen?
Doing amazing. Really looking forward to doing this one.
Excellent, Chris. Good to be back after a bit of a break.
You did have a little bit of a break. You were off and caravanning all over the countryside, so you're all refreshed. But you did that right in the middle of a lot of action going on. I know, Isaac, you and I were sort of talking about, before this month had come, that there was potentially a lot happening. A lot has happened, hasn't it?
Indeed, a lot has happened.
We've got a lot to go through today. I mean, we've all brought together some charts that I think people find really interesting. We were excited when we ended last month's analysis because we were really thinking that this stuff would come. But we'll go through it in the usual format. We'll look at that macroeconomic analysis first, the Bitcoin market analysis, and then the technicals to wrap it up. Sort of starting off where we always start off here with this market cycle. Joe, we've seen that little bit of a tick up here with that big green dot on the end really stepping up a bit. For the last several months, we've been talking about this really should have been moving higher. Is this the start of what we were expecting?
Yeah, we certainly have been talking that for quite a while, haven't we? Yeah, like you said, it's moving in the right direction, and it makes sense in terms of seasonality and where we are in terms of the year, and we'll talk about where the liquidity is going to come from to the rest of this presentation, but that's heading in the right direction, and I think give it a couple of more months, and we'll be over that neutral line there, I reckon.
And the drivers of that we always talk about being what's going on it's not the US economy that we only look at, but we look at the US economy specifically to see what's going on in the major economy that does impact all of this. And we seem to have seen a tick up here as well.
Yeah, so services are really starting to outperform, while manufacturing is not really playing ball at the moment. We did expect, I know we spoke about this about 6 weeks ago when we had our last podcast, that we were bouncing on the bottom, and it may start to look like we're going to break out a little bit, but I'd like to see probably another month or two before we can say we're certainly, and I'd like to see manufacturing starting to move up as well before we can really say that the economy is going to start ramping up. The US did revise their GDP numbers last week or the week before, and they expect 3% growth, which is actually quite a strong economy in terms of where they've historically been over the last, before we've had that huge inflation cycle. So, we'll talk about interest rates, I'm sure, at some point as well, and expectations. But really just waiting on that manufacturing to tick up.
Yeah, and that's often the one people have been most focused on, the manufacturing side of it. I think it's interesting that services often gets neglected, but is an increasingly important part of the economy, and it has been definitely leading the way here. So I wonder if that's potentially a trend going forward as well, that we see services really carrying its weight.
Well, it's a huge part of the US economy, services. So, and I think in developed nations, that's generally where economies move to. So, if you're talking like China and more emerging markets, and manufacturing, where labor and manufacturing is cheaper, that's obviously going to be a larger part of what their economy does.
You mentioned inflation. We had seen this tick up here in the leading indicator, really heading right towards this 2% line, which was always the target. The official number heading down that way. Is this the end of that downward move in inflation, do you think, or is this what we would expect? How do you view that?
Well, we'd certainly had a large drop off there, so it's potentially just basing out or correcting off that very low reading. I think it touched about 1.2% inflation, which is actually quite low, particularly when you expect the economy to start growing, economy that's growing at over 3%. So I think that probably was the low, and we do expect our figures and the official figures to converge as the economy continues to grow and liquidity starts to rise throughout the end of this year and into next year. I wouldn't be surprised to see a minimum basing out, if not starting to tick up a little bit.
And how do you think about that 2% level? Because I know that's always been the target. Does that really give the Fed, particularly in this instance, the room to move? Because they say, well, they can effectively claim inflation's conquered when we're getting down there with the official rates as well.
Yeah, 100%. So I think they're going to be quite happy with their 2% inflation and 3% growth. And you're actually theoretically growing. You've got positive growth over inflation, so that's what you would theoretically call growing yourself out of the debt situation they have. So you combine that with the lowering of interest rates, cheaper debt, then not that we expect the debt burden to come down at all, but it does help at the margin. In terms of interest rates in a couple of weeks, well, the Fed will meet in a couple of weeks. Originally, they were priced for a 50 basis point cut, but we've had, like I said, that 3% growth, GDP growth revised. We've had a reasonably strong jobs report, so the market's effectively factoring a 25 basis point cut, which at the end of the day is probably even 25 basis points is probably not necessary, but the Fed started its path towards cutting, and I think they're going to stick to it. Because generally, if you've got 3% GDP growth and you've got inflation, which is reasonably low, you generally aren't cutting. So the fact that they are still cutting into a weakening economy is well, it's certainly going to be positive for markets.
And that's certainly something that worries me a little bit, is that it is a little bit different in this environment because it's not really the traditional cutting environment for them to be there, but they really do need to do that. Changing the topic slightly, we always look at global liquidity as the driver of really everything that's going on in world financial assets. But this chart here is quite effective at showing that really that is what happens when you've got growth happening in global liquidity. You see growth happening in wealth or assets generally. The same when you see the contraction, you see contraction in those values as well. We specifically look at it for Bitcoin. I brought this chart up a number of times in the past because it shows that there is really just an extraordinarily high correlation between Bitcoin and what's happening with global liquidity. So this is really just the background so that we can talk a little bit about global liquidity and why we consider it to be so important. The third part of that sort of background is that it very consistently follows cycles. And we've seen this since 1970. You've got low points and high points, and it can be very choppy on the line in between. But what it shows here is very consistently that we're going to move through a cycle where liquidity increases in the system, pushes those asset prices higher, then we top out for some reason, whatever that reason might be, at a peak in the cycle and head back down lower. All of that leads us to what we're seeing in the real-time data with that index. What's your view on this, Joe? Because we've had the low really a little while ago now in October of 2022. We've been through the upward, or the start of an upward path here. It's been a bit slow. This is what we've talked about for a number of months. It's sort of been bouncing along the bottom, but are we now moving out of that convincingly with the things you've talked about with growth and inflation sort of heading in the right direction?
Yeah, so if we look at the criteria and the inputs for how we get expanding liquidity, if you think back to the start of the year and even the end of last year, China was a massive player. There was a lot of liquidity and stimulus coming from their end. Seasonality, in terms of seasonality, we're around that same point at the moment with China. Their economy is struggling somewhat, and they had a bit of a short, sharp stimulus a couple of weeks ago, which was reflected in their stock market. But many pundits are saying that it wasn't enough, and I think we're definitely seeing that the amount of money they injected wasn't enough. So I would have expected them to continue doing that. They haven't done that yet, but I imagine that it's probably coming. It might happen tomorrow. It might take a couple of weeks. And then you've also got what we've spoken about previously in terms of the US, and that's the other big player, China and the US, obviously. With the debt ceiling being reached at the end of this year, they'll have there's about $600 or $700 billion in TGA, the Treasury General account, that needs to be spent. They'll be spent straight towards the economy. That's why we talk about seasonality. We know these things are coming. They don't always happen in a straight line, but they do occur. So generally speaking, we should see that line start to tick up significantly towards the end of, well, we are starting to see it tick up, particularly in developed markets. The emerging markets that, like China, are sort of killing it a little bit, but we do expect it to be a lot higher by the end of the year.
And that's reflected here because the red's showing us economies that are contracting or taking liquidity out of their system, green pumping it back in, the orange is sort of neutral. And we're seeing a lot more green here, but some of the big ones still are holding us back with the red, where we're not seeing that necessary level of injection. So net overall, countries are generally in that phase now where they're increasing liquidity. But when you look at some of those big players, specifically China and the US, they're just not injecting enough at this stage.
Yeah, and those two players plus Japan, UK, and Euro, that's 85% of it.
Yes, that's right. So it does matter. It does matter. That's
It
why
does matter.
looking at the growth and inflation for the US is relevant there, because the big players do matter quite a bit. So if we pull that back and look at Bitcoin against that backdrop, we've got this chart which is showing the average Bitcoin price for the month. So it's still showing it down here a little bit, which actually is quite useful, because we know that we're now much closer to the top of that range against what the liquidity index was for September. So pushing in the right direction as we would expect. My concern with this is really, to see it move higher, we're going to need to see a follow through in liquidity probably reasonably soon. Otherwise, any move, a substantial move higher in Bitcoin, is probably more speculative without that base level of support underneath it. Isaac, what's your view on that? Because I'll flip over to this next chart as well, showing it sort of at a logarithmic chart, where you've got the rate of change of global liquidity underneath it here. I mean, it looks very flat. Do you sort of see it the same way, that if everything continues on this way and we do see that little bit, we really bust out here? I mean, I know you've got a lot more technical graphs later.
I think if we don't have the liquidity backdrop accompanying us as we shoot up, we can have a situation where we sort of create a fake out above the range, everyone gets hyped, and we come back into the range, which could also extend us a lot longer in that time horizon, right? But if we're back with liquidity and we shoot up, that's a much stronger base. That's actually going to hold us and prop us up. So I think it is quite crucial that we actually have that liquidity to follow us through while we get out of this range. Otherwise, in my opinion, it's not going to be as strong as we'd like. And be rather speculative.
And that's absolutely my fear here, that if we break out substantially without the liquidity backdrop, it'll be short-lived. It'll head back down. Joe, looking at the weekly data specifically here, because that gives us a little bit of quite a zoomed-in view. We have had that little bit of a pullback here, which relates to what you were talking about, China in particular. Bitcoin has been moving up into that. We generally want them in the same direction.
Well, we've been saying for a while that those alligator jaws had to close one way or the other. For a while there, it was looking like the liquidity was going to expand quite quickly, and Bitcoin was going to play catch up. But it sort of turned out that they've sort of converged evenly together, with liquidity dropping
Bitcoin
and
up a
Bitcoin
bit,
going
liquidity down a bit. Yeah.
So it's not surprising. You've got to remember that the correlation is not, as you can see, it's not one-to-one. Like, things take time to play out. But I remain quite upbeat for the rest of the year, at the back end of the year, which we've been saying since April, May. I'd expect both those lines to tick up throughout November, December, and into January actually as well.
Okay, so with that backdrop of global liquidity and the macro picture, it's all looking pretty good. Now we're going to dig into a little bit more of the Bitcoin side of things specifically. Then we'll go into the technical analysis side of it as well, to see if that all supports that opinion. Isaac, we will flip through a few of these quite quickly, because you covered them quite extensively in the past, and you've got some new stuff to talk to us about today as well. But the MVRV score, or market value to realized value, looking pretty good here.
Yeah. So this one's looking quite good. We're actually reflecting quite similar to the 2019 phase. So, I like to start with this chart because it gives you a good grasp on, because it measures the average cost basis of Bitcoin, right? So where people purchased it. And it lets you know by the ratio, which is the MVRV score, how sort of exaggerated we are in terms of the bull market, right? So with those peaks, we see the MVRV shoot right up. And right now we're relatively low. We're at 2. And I remember back at the start of these videos when we were shooting them, we were projecting, I want to start to see, 5 and 6 later in the year. Obviously, it hasn't happened in that capacity. We haven't, not at that time frame specifically, but I would have, back then we probably would have thought it would have been higher than what it is now. But there has been a few headwinds along the way going through. But we're still relatively strong if we look where we are in price and where we are in the MVRV score. So you can see that throughout the whole trading range, the average cost basis has risen. So, if the MVRV score, dials back down, and then as we shoot up again, which we expect to happen, that will start to shoot back up again. So it rebases us at a higher level, which I think is a bullish thing, and I think it's going to be great going ahead.
And I say it's quite bullish as well, because there's a lot of room to move to the upside there. It's probably similar analysis that you've got a couple of fear and greed and sort of market sentiment things that we look at every month when we do this. they're not at extreme levels here, are they? I mean, they're high, but they're not extreme.
Yeah, this one's not. I mean, you wouldn't call this extreme. So we're sitting at around 72, and it's also been extremely choppy. So
Well, but last month we were talking about it into almost in the extreme fear area.
Yeah, it's just this trading range has been full of emotions. So once we break out of it, I guess we'll see what the true sentiment of the market is then. But where we are now, it's quite hard to gauge if it's just going to keep doing zigzags. But yeah, definitely something to be looking at. So right now we're sitting at 72, which is in the greed section, but not overly greedy. And, you can stay in these stages of greed for actually large extended periods of time. So we saw that in the last run too. We were sort of hovering at that level, even though it did have interim, ups and downs, but you can stay elevated for quite a long time. So that's something to be aware of.
We're full of this market's full of a lot of emotions. I like that line. I think we'll come back to that line again. But here, when you look at the bull and bear index, this was using different metrics but similar output, wasn't it?
Yeah, it's more the short-term one. I like this one because it lets you know how, I guess you could say, the crypto Twitter and all these sort of forums are talking about crypto, and it sort of collates that information, puts in a score, right? So what we got over here is we actually had that low hit. I think it hit around 0.1-ish, which is quite low on the actual score. And then that was accompanied by Bitcoin at a low, and we've since had a pretty large rise up then. So this is something to be looking at. It's crucial in terms of short-term predictions and where we're going to be heading. So right now we're at a neutral phase because we're 0.5. So what does that put in the cards? Does it mean we're going to tank as much, or does it mean we're going to rise? I think many things happening right now because we're also at a resistance level, which we're going to go and look at in the next few slides. But we'll discuss that one a bit more on.
Sure. And just to sort of round that out, you also tend to look at Google searches to get a bit of an indication if people are really paying attention to Bitcoin or crypto generally, and a bit flat here as well.
Yeah, it is flat. I guess you could say no one's really looking at it right now. And even from, my from an anecdotal perspective, I don't think the interest is, from a retail perspective, is there right now. But we sure know it will come when, we start reaching all-time highs again, and people will realize, oh, well, I wasn't even looking at this, and now it's back at this price again. And then we'll start to see that tick up. It's actually quite a bullish thing that we're actually low on that, and then we're at this price. Like, we're nearly at all-time highs. We were a few days, like a day ago, we were $69,000. Now we've dropped back down a bit, but, relatively high, right? And then we had that Google trends quite low. So that's bullish in my opinion.
And to back up what you said there, I mean, we can say anecdotally from the Ainslie offices, gold's been hitting all-time highs sort of day after day recently. And absolutely, once it hits those all-time highs, you get a whole lot of attention, a whole lot of people through the door who might not have really been thinking about it before, but are thinking about it again now because it's hit those highs. So
and then all the news companies will start putting out in their articles and everything that we're at all-time highs, and people start to see it from that perspective, and they start to dabble into it, and then just propels it even more. Especially accompanying with the liquidity backdrop that we expect to happen, it could be quite a turbo situation.
Yeah, absolutely. This was a metric that sort of you were looking at quite specifically, doing a bit of TA on something that's not usually TA, but it appears to be working so far, doesn't it? That you've had sort of this low that bounced off here with active addresses. Yeah,
let's just hope it continues that way, because it does tend to be a predictor of a low when we start to hit those low pivot points in the charts. And that was just a little pivot point that I saw that had a few support and resistance bounces. So I thought, why not chuck that there at the time? At the time, we didn't have much data going on. So it's just when it's just hitting that low. And we've since found support there. So if that is quite a good thing, especially looking at what it historically does when we do reach those lows, we do see them rise up. So, something to be looking at. But I wouldn't put too much stress on it because it's not really something I've seen people do, but something to add.
Yeah, that's a useful little addition there. This monthly Bitcoin analysis is brought to you by the Ainslie Group, Australia's trusted choice to buy, sell and swap gold, silver, platinum and crypto online or in our Brisbane and Melbourne showrooms. With over 50 years of operation, we're your reliable partner in wealth management. If you're looking to buy tokenized gold or silver anywhere in the world, check out the Gold and Silver Standard, the security of real-world precious metals combined with the flexibility of blockchain. Joe, you've been looking at this really since the ETFs came online over a number of months now. What's your view on this little? We seem to have had a little bit of action in the last week. What's going on there?
Yeah, so there's a lot of, I think we had a little over $1 billion of buying last week in terms of Bitcoin, and a lot of people look at that and go, well, why isn't the price going up? $1 billion is a lot of money. What we also need to remember is as the price goes up, you generally get those premiums on the futures contracts blow out. So you'll have the hedge funds stepping in. They'll buy the ETF because it's a nice, safe way for them to buy spot, and they will short the futures for a nice little premium and wait for that gap to close and pocket 6, 7, 8% or annualized or whatever it is. So as Bitcoin's purchased into the ETFs and brought into the ETFs, it doesn't necessarily mean that it's just all one way. Like it's been neutralized sometimes or a lot of the time by these hedge funds with the shorts on a derivative exchange. So I expect if we move from from a bullish phase into a bearish phase, we'll see a lot of that money start to come out of the ETFs, and the shorts on the derivatives exchanges will close, once again giving us a net neutral. So it probably won't affect price as much as everyone would think if you're selling that much Bitcoin out of the ETFs.
That's quite an interesting way to look at it, because it is confusing for people when they see the number. They expect a direct correlation into the price moving higher, and it certainly has moved higher, but not, like you said, enough to justify that. But I think people do need to get their head around the idea that there's a lot of participants in this market who are trading in different ways. It's not just a straight buy and hold, particularly when you're using these ETF products.
100%. And we've said it before, we've said it over the last couple of months, once we break through that all-time high, and as Isaac said, once we reach that sort of FOMO stage and greed fade, then I think we'll actually see a lot of actual spot Bitcoin buying without the short on the other side neutralizing the buy, if that makes sense. So it's still within that top period at the moment, so I'm not expecting too much.
Now, this is a topic that's been, well, certainly will be resolved or possibly resolved. You never quite know these days in elections at this scale, but we know this is coming. And from my perspective, the markets, when I talk generally, probably looking a little bit outside of crypto here, but the markets are not really factoring in any form of volatility here. It seems like the markets are quite smoothly reaching those all-time highs. I've had this conversation with you, Joe, about if we have anything unexpected come out of the election, or even if we have what is expected come out of the election, based on what you're showing here, that it's potentially going to be a volatility event. How do you view what's unfolding, particularly when we've got Trump here currently on these odds at over 60% chance of winning?
It was actually a little bit higher last time I checked. It was about 64 at the moment. So in terms of how the market's viewing it, I think they're definitely pricing in a Trump win. He's certainly more favourable towards corporate taxes, like reducing corporate taxes and making it easier for corporates to function within the US, whereas the Democrats haven't really laid out any sort of guidance on what they plan to do. They want to do an ultra wealth tax. I think is about as close as they've come to explaining that one. So the reason I have this up here as well is not necessarily to get political, but just to look at how the market is viewing what they think is coming in the election. And to be clear, this platform here is called Polymarket. It's a decentralized betting market, which allows you just to take USDC and actually bet. So this is real money on the line. That's why we always look at actual betting markets versus a poll, because a poll can be manipulated. You could just go ask all the Republicans, or you could go ask all the Democrats who they're voting for, and you can get it skewed either way. Whereas when you've got money on the line, you actually get people who have a vested interest in making sure they win.
Now, I know there has been controversy over this particular site. I mean, I don't see where the controversy is coming from personally, because these are big volumes that are being placed in these bets, because the controversy was around whether there was manipulation going on, people rigging these markets. And sure, there could be $1 billion worth of betting volume going through to rig the market, but that's a quite a feisty little move you'd be making there. A lot of money to put online just for some website to show the percent that you want it to show. Like I don't really buy that argument.
Yeah, well, if you look at markets like Betfair, which is probably the next, like you got to remember that all betting platforms have a spread within their prices, whereas these ones have a very tiny spread. And Betfair is basically not a decentralized, it's a peer-to-peer betting site, and it's effectively giving you the same odds. So to try and manipulate it would mean that you're giving someone else the opportunity to come in and arbitrage between two exchanges like Betfair and Polymarket. So I think that's why I always look to something like this to get a feel for what the true odds or the likely outcome is.
And it's not, of course, saying that it guarantees either side is going to perform like that. We've seen odds I've seen some basketball games where the odds were much wider than that and the opposite outcome happened, but it certainly gives you some indication of what we can expect. And you actually brought some charts along to show that other markets are sort of reflecting this as well.
Yeah, so you look at the big picture, and this is Trump's his own company, his media and technology company, and ever since that Polymarket or even the odds have started to move in his favor, the markets have started to move in the same direction. So this is just an example of that correlation. If you flick to the next one, whether it be technical or we'll call it the Trump trade, we're actually starting to see Bitcoin break out above, making it a high there. So as we know, the Republicans are more favorable towards crypto. Well, as that's what they've told us. You never know what you're actually going to get. But in terms of what their promises are, that the market tends to favor Republicans more than the Democrats at the moment.
So a little bit of volatility on the horizon potentially, but I would be a bit worried about that if it were not for this next chart, which actually shows exactly what we can expect with a much more reliable indicator than what we can get from polling data. So talk to us about the McRib.
Well, I see Isaac brings all his technical charts, so I thought I'd step in and just put my little flavour on it. So the McRib is just a burger that McDonald's brings out, but it's and whilst it's funny, every time it comes out, we get a massive meteoric rise in Bitcoin. I think it's probably more to do with the seasonality and the liquidity cycle more than anything, because you'll notice it's towards the end of the year during a bull phase. So, but we might come back to this chart in 6 months and lean on it again and see how we're going.
I feel like I need a trip to the US just to try their version of this McRib. I don't think the Australian version that they pulled out once or twice was anywhere near as good. But
no, I feel like a McRib now.
We'll leave Joe's high-level technical analysis there. Very, very competent, and we'll move over to you, Isaac. You've been looking at the cycles for quite a while. Every month we inch a little bit closer to the green area here. Are we still on track, halving still performing, or post-halving still performing as you would expect?
Here's the thing. We're not performing as the last cycles were. It's because the last cycles we were obviously rising a lot faster than what we are currently now. Now, whether that's to be expected or not, who knows? There is the law of diminishing returns as we extend in the time horizon, but we have to factor in what's liquidity doing, because we can't just be one side and just look at this and be like, okay, it's lagging like crazy, which it is a little bit, but not crazy, but definitely up to a little bit. If we believe liquidity is going to be increasing, which we do, then we are going to be expecting to see this higher, right? But where we are right now, we're still not at the stage where we're going to be positioning for, a more bearish mindset. That will come, so we got to be ready for it. And I'll be here in the corner, waving my flag and saying, let's start the switch eventually. But only if we start to see those other puzzle pieces matching. We're not just going to look at this one indicator and be like, hey, it's time to be bearish. So we're going to be looking at a few different metrics, which is what we do, right? But yeah, where we are now in this indicator, we're not there yet in terms of flipping our biases, but we got to start coming into the months later on, going into next year. So that's going to be important to look at, and I'll be here watching this one carefully.
And there is still time. Like you can see the moves as they happen quite quickly.
Very, very fast.
So there's only a small amount of time required to get to those levels of the highs that was expected. And we're in striking distance of that from where we are here. Your weekly stochastic, seems to be heading in the upward direction.
It is. It's in the upper band now. I will say this: it hasn't been preferable stochastic. It's been quite choppy if you look at it. So it's been actually quite hard to give a proper bias, which is why we said in the last video I was a bit indecisive, where I said that we can either go a little bit higher because liquidity was low in those regions. So that was my stance at that point, which so it worked out okay. But where we are now, I wouldn't put too much on it because we are at a resistance level too. So that's important. Daily level, we have our trend line here. So a lot of people look at this trend line and they're saying, we want to see the breakout, which is true. I mean, you want to see the breakout and I want to see a claim above it. We were talking about liquidity before. if we see liquidity start to increase with the breakout, that's good. If we start to see a fake out with liquidity not accompanying us along that, then that could trap a lot of people, and people expect it to rise up meteorically, but we actually dip back down and extend longer, potentially fulfilling the Bob Lucas thing where he was saying trading till December-ish, where we're just ranging for a bit. That's something that could be in the horizon with that one.
And talking about the sort of Bob Lucas style 60-day cycles, I mean, I know I was watching his analysis on this, and he was calling potentially early for a left translated cycle here, which would continue this pattern of lower highs and lower lows. But it looks like we have a very clear right translated cycle forming here, which would be the first of an up move here, where we've got a higher low. I mean, that's controversial whether that's higher, because some people consider that low, whereas clearly there was a spike low lower there. But now, if this is the low and we can sort of end the cycle up here somewhere, that's a pretty constructive setup, isn't it?
I think it is a constructive setup, and I also think that this level here for short-term reversal would probably be a good spot, because we also have volume levels there too, which will go in the next chart, I think it is, or maybe the next one after that. But yeah, good level to do it now, in my opinion.
And your volume levels, like you talked about here, you've talked about this quite a bit. We're right where you were sort of predicting there.
Yeah, so we're over here now. This is where you'd be expecting to see that from a technical perspective, for that retrace into that next 60-day cycle low. And then you've also got the RSI here. This is in the daily, which, it's at the highs, so you'd be expecting to start to trend down a little bit. But you never know how far low this will go. We could have a massive sell-off, but I wouldn't be expecting that to happen at all, looking at the sentiment, what's been occurring there. So far looking so good. And
if we talk about this is new that you haven't really talked about previously, but it's something that a lot of traders do follow, this CME gap filling. Can you maybe just give us a bit of an overview here? Because you've got a few slides sort of showing us different examples of this.
Yeah, so this is the Chicago Mercantile Exchange. It's for the Bitcoin futures. And what happens is that gap is essentially from when it closes on the weekend. So there's going to be a gap here, and then when it opens back up, it equalizes back to this Bitcoin spot price, and then continues on the trading week onwards, right? So what happens here is typically we see them get filled. Now, the reasoning as to why they get filled is quite vague. A lot of it's psychological levels. A lot of it's also that people have liquidity levels down there, so stop losses, stuff like that. And it's just a magnet, so there's more eyes on it. And it's almost like a self-fulfilling prophecy. When people are looking at it, then it tends to go there. Because other than that, from the research I've done, I can't see a very, very valid point to fill the gap, other than what people are sort of anticipating in their own minds. So just to clarify what that means, the gap here, so that if you're looking at the chart that is only open during the week, it closed the week there. Yeah.
Open the week up here, that's the gap you're talking about.
Correct.
And later, because that gap exists, later on it gets filled. Like, that's a very common thing, that later on we retest that level. So don't get necessarily too excited about the big gap open, because it's likely to come back down and fill it. Is that
correct?
Summary?
That's exactly how you do it. And this whole bull run so far, from what I saw, pretty much every single gap has been filled so far, either from a gap down or a gap up. You can even see the gap up gap down we had there with the red one. We even just had a short little spike up and then back down again. So I personally haven't been looking at this one for, I've just only recently got onto it, but it is looking to be like something that we could add to our charts, which is nice.
And looking at the current sort of thing here, we had a little, so going by everything you've just told us and what you're teaching us about this, you're guaranteeing that we're heading back up into this level anytime now.
Bitcoin's guaranteeing, not me.
No, Isaac is guaranteeing we're heading back up in that direction.
Yeah, that's what we got there. So everything else has been filled. You can see there, the gaps have been closed. So that's really the only one open we have right now. So yeah, upwards is where we're going.
All right, locked in. Very excited about that one. Now the MACD here, or the moving average crossover divergence, we've got a very commonly used, well respected indicator. Looks like we're crossing over here.
It does. Also, one thing I would like to add is, when people say be contrarian, that also works at the extremities. Like during the mid section of the cycle, it's actually favorable to be with where the crowd is thinking, because it's not always be contrarian, because if you were that way, you probably wouldn't be the best. Definitely be contrarian when everyone's being turbo bullish. Likewise with the reversal of that, which is the bear market. But during the midsection, you wouldn't want, so people are probably expecting to go up, which we do too. You wouldn't be switching yourself and saying, no, I'm going contrarian because I'm a contrarian on every single aspect. That wouldn't be beneficial for you. And from our technical perspective, we are quite in a good position here. So yeah, the MACD looking good.
Yeah, I really agree with what you've just said there. I think what's important is where people need to be contrarian is when they're not covering the full breadth. So in our case, if they're using a particular indicator and you look exactly as you just described for its extremes, that's sort of where you can think, okay, well, it's probably not going to continue higher here because the whole market's gone higher, and everyone's expecting it to go higher. But when you're looking across things like sentiment, for example, remember we use sentiment to be a contrarian indicator specifically. Yeah. But when you're looking at something like this chart here, where I would argue, this is on a very, very short time frame, but this up here was where you potentially get a little bit contrarian because the indicator's starting to turn over, but people are still very bullish. In a situation like that is where you get it, not when you're crossing over from a low point here.
Yeah, because you're at that point you had that, which was the MACD, for example, which was like hitting those large peaks, and you had sentiment, which you could tell was very frothy at that point.
Yes.
So that's you got to add these things up and sort of gauge it. It's not necessarily a one size fits all answer, but yeah, definitely.
Okay, well that's all looking exciting. I love this chart. These lines here, they've just been, ever since you've described them as magnets, all I can see is a magnet trying to drag that price higher. They're still looking nice and bright and attractive there to really.
Yeah, it's looking very good. And I think I saw on Twitter there's around, don't quote me on it, but I think it was $15 billion of shorts up there. So that's going to be amazing if we punch through that, because that's going to cause quite a lot of, I think probably maybe potentially a short squeeze. Who knows what's going to happen when we get there. But yeah, looking quite good. And it might not happen for this daily cycle, but maybe the next one is where it happens. So we got to keep our eye on for that. Fingers crossed. So important.
And a short squeeze in that, and you've got sort of another metric here showing a similar thing, but a bit closer. The short squeeze, of course, being that all those shorts have to buy. So then that forces the price to continue to go higher and then pushes it. It's sort of a cascade, which can happen either up or down when people hit those key levels.
Yes, correct. And then over here on the short-term liquidity, we can go down lower, which would actually make sense if we were to top out now. So potentially that's probably going to be our max drawdown for the next 6-day cycle low. So around that, 63-ish K, if we do hit that last band. So that would be quite nice to look at. I wouldn't be expecting it too much lower than that, just based off what we're looking at here.
And that's actually that lines up quite nicely with pretty much all of those charts you were talking about, the pullback, the 60-day cycle high, the time frame, all of that. It would be a reasonable downside target.
It's too good to be true. Let's hope it turns out. Yeah.
And finishes off in this section with the market structure, because similar to what I was saying before, we really do seem to have changed.
Yeah, we certainly have. And you can look on the red-hand side, which I've put on the left side there. We were making those lower highs and lower lows. We've now shifted to making higher highs and higher lows. So that's a change in structure, which is quite bullish. And you want to see market structure shift, and if you're going to start shifting your biases. So we are definitely having that. And yeah, as long as we don't hit that low we got previous to us now, that's going to be quite good for the next rebase up. So yeah, looking good.
Excellent. Well, that's another month of analysis completed. We've really, each of these months at least for the last few months, we've been expecting some of what we've seen this month. From my perspective, we probably haven't really hit the full potential yet that we were expecting maybe in October. It might be pushed out a little bit longer. From my perspective, it's pushed out because of that liquidity not really being there at the level we would like to see. So it's really dragged it on. So where everyone's talking about, October and expecting really that growth in price to happen really quickly, for me, it hasn't quite happened yet because we're still waiting on that situation for it all just to line up. Is that how you view it as well. Final thoughts. Isaac, I'll go to you first.
Yeah, so I'll just preface saying that if we do have a breakout and it's not accompanied by our liquidity, I don't think that it's probably going to last as long as people expect. It might just fake out, trade for a little bit, and dip back down the range, which would get people extremely, extremely bearish. So it's like the fake out, and that was like people were probably expecting that to be, because according to all the time horizons and everything, we should be pumping now, right? So people were probably like, oh no, that's the top, that was it. And if our liquidity backdrop is then starting to creep up in the months later to that, then that could propel the real move up. So it's very variable right now. We don't know what's going to happen in that sense, but we have our long-term bias, which is still intact and it hasn't been shaken yet, but things have been delayed slightly. But on a technical perspective, from the short term, I think potentially down a bit lower since we're hitting that resistance level there too, and then coming into the 6-day cycle low, which is then our good attempt to see our next rise up. So we'll see how that goes. If it doesn't work out, then more consolidations on the horizon. Potentially what Publicus was saying for his plan if we consolidate towards around December-ish.
Joe, like for your final thoughts, but also a question in there, do you see the potential here for a sort of a double top if that happens, if we do get the move really quickly and it doesn't have that liquidity support? Do you view it differently? What's your sort of wrap up of everything we've looked at today?
I think the liquidity support still comes. We've talked a lot about seasonality, and as Isaac was saying, people will reflect on what has happened in previous cycles and extrapolate that forward to today and expect the same thing to happen. I think even though the liquidity is delayed, we're waiting for China to come in and play catch up with what they're doing over there. It may, at worst case, just be like that Bob Lucas scenario where we just really kick off the end of November and into December, which is fine. Like markets aren't always the same. They just rhyme. So they'll be doesn't always happen exactly the same way. And if it takes a couple of extra months, I'm more than happy for that. But what I am like in terms of drama, what I am really looking forward to is this US presidential election. So when that all happens in, I suppose, what's that, about 14 days, I think it's just going to be a bit of a wild ride for markets. Not that I'm necessarily going to be trading it, but it would just be interesting to watch. I think it's just going to be a fantastic time to be alive.
So we've got plenty to look forward to, whether it's excitement of election markets or whether it's the McRib rally that we can expect. Yeah. I think that's what we'll take from today. Throw all Isaac's hard work out the window and just look at what McDonald's has got on the menu. But thank you, as always, to both of you for your deep dive analysis on that. Thank you, Isaac. Thank you, Joe.
Thank you.
No worries, mate. See ya.
Thanks, everyone, for watching. We'll chat again soon.